You were listening to chartingwealth.com for Tuesday, the 26th of June, 2018. Thank you to everyone who's purchased our book, Charting Your Way to Wealth. You can have your own copy. If you'll just go to our website, chartingwealth.com, look under the daily market reviews. You'll see the links there to purchase the book. If you look at the top right-hand corner of your video screen right now, if you're listening to us via video, you'll see a link that will take you to a spot where you can also order the book. This is the way we've monetized our website. As you know, we bring these market reviews to you every day along with all of our training for free. Now, we are getting toward the end of June. What does that mean for you? Well, that means when we end the month on the 30th, we will be recording for all of our subscribers, and you can be a subscriber by just going to chartingwealth.com and signing up for free. We'll be sending out a link to all of our subscribers to the quarterly chart review, and our quarterly chart is a beautiful, beautiful thing. Now, we are traveling today. I've paid a lot of money to have a fast website, and it is just the internet connection. Looks better than it did, but it has just been giving me a hard time. We're looking at the quarterly chart, and you can see on our quarterly chart going all the way back to the year 2000, actually beyond that, but the year 2000, 2004, 2008, 2010, where the market went down, up, and over again, our quarterly chart told you when to get into the market and when to get out of the market before the crash is when to ride it up. And we're going to review what this latest candle is telling us at the end of the month. So please make sure you're a subscriber. That way you will receive this quarterly review, and every time we have new people listen to it, they are amazed at the prescient nature of this quarterly chart. It is an amazing thing. And again, we've only found it on the S&P 500. It does not work on the Qs, that's the NASDAQ 100. It doesn't seem to work on bonds or gold. One thing that we teach in our book is to use charts when they work. When they stop working, you stop using them, and not all the charts work on all the stocks or ETFs all the time. Certain times of year things stop working, such as gold. Remember how well the 4-hour chart worked as a total trading chart in gold for about 2 years? And then it sort of stopped. It's trying to start back up again, but again, not like it was. It was amazing. So again, let's jump into these charts today. Big down day for the markets. We see the S&P 500 down 1.36%. The Qs way down 2.25%. 20-year bonds consequently up a little bit. Gold down just like stocks. Let's jump into the S&P 500 first on the weekly chart. And of course, we see a big rollover. Now remember, we took some nice profits, virtual profits, in that bump up over a 2-week period after the weekly vertical crossover on the 1st. And after we saw that nice up move, we pulled out after having made many dollars a share on our virtual trades, or if you were trading options. Again, virtual trading, we're not a stock calling service. We're not giving market advice. We want you to train with us. And then when you get good, you can make up your own decisions what to do with your own money. But what do we see going on? Well, we saw a red spinning top at the end of this last week, which meant indecision tending down. We had busted through our 2-day and weekly trend lines. And the first day of this latest 5-day candle, big down candle, solid red with a wick on the bottom. Derivative oscillator losing momentum. That started in the prior week, and the price percent oscillator looks like it's getting close just on Monday to crossing over, going down. Now we go to this 2-day chart. It's loading up faster. That's good. We see that it has consequently also crossed over, going down. Now remember, we just completed the latest 2-day candle, big down candle, the biggest we've seen in a while. It is the 3rd in order, so 6 days of down movement. Of course, the week pushing through, we've already pushed through the 2-day, and we've confirmed to push through the weekly. The derivative oscillator is gaining momentum, price percent oscillator heading down. So again, some strong down movement. We go to the 4-hour chart, and of course, we had that 4-hour chart crossover going down all the way back on the 14th of June. And of course, it dropped, slid sideways for a while, and then dropped again big in the morning and the afternoon. Derivative oscillator gaining downward momentum, price percent oscillator heading down. So, of course, don't want to be in an S&P 500 trade right now. We took our nice profits virtually in that, and it worked out quite well for us. Let's go to the Qs, which saw the biggest down drop today, 2.25%. That's a heavy drop. Now, we saw that coming, did we not, my friends? We saw the price percent oscillator heading up over the last several weeks along with the derivative oscillator. Then things sort of petered out toward the end of the week. We saw a weakened candle pushing through both the 2-day and the weekly, just like we saw in the S&P 500. Not as strong a down movement. It wasn't a red candle. It was actually a red open box candle with a wick on top. Not really, no wick on the bottom, but week started off very, very weak. And of course, we see the derivative oscillator losing momentum. Price percent oscillator headed down. Let's take a look at that 2-day chart. Of course, it is now confirmed crossing over, going down. And again, that crossover started at the beginning of June going, beginning of May going up. Now we're actually locking in that crossover going down. The thing I love about our freestockcharts.com and TC2000 is that it's so easy to make all of these adjustments. It's easy to use, to learn. It's just intuitive. But we see that we have a strong red down candle on that 2-day chart heading down. Derivative oscillators lost tons of momentum. Price percent oscillator has crossed over going down. Look at the 4-hour chart. What do we see? Strong down movement in the morning and the afternoon. But again, we saw that crossover going down all the way back to the afternoon on Friday, the 15th of June. And of course, that's when around that time period we pulled the plug, if not actually before that, on the NASDAQ 100 after we had that beautiful run up, gained a great deal of dollars in our virtual trading accounts for each share that we owned over about that week and a half period, 2-week period. So again, quite nice run up. We'll continue to watch things as they move down strongly. We'll see how long that goes on. Again, aren't crossing over yet going down, but this is just the first day of the latest weekly candle. So we'll see what the week has in store for us. Could things bump back up? Yes, but we don't have a trade right now because we have a 2-day crossover going down. Remember, our requirements are the weekly has to be moving in the same direction as the 2-day, and now we have that divergence in the 2. They are going counterclockwise to each other. Okay, back to the weekly, going to 20-year bonds. Now, 20-year bonds, a little bit of a bright spot there today, up 2.2%. Derivative oscillator, 0.22%, forgive me. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. And on that weekly chart, remember we had that weekly vertical crossover back on the 25th. We'd had a strong week that followed, that's the 25th of May. We had a strong week the following week that ended the 1st of June, and then things sort of slid sideways for 2 weeks and started moving up more over the past week ending the 22nd of June, and so far this week we see green up candles, and again, still hasn't recovered from the top that we had in that week all the way back on the 1st of June, but does appear to be trying to move up. Again, the 2-day chart is, the weekly chart is moving up. We take a look at the 2-day chart, we can see that again it peaked out back on Tuesday the 19th. That's where that last 2-day candle hit the highest mark. Then sideways on the 2-day chart ending Thursday the 21st. And what do we see now? A green spinning top means indecision tending up, but again, not anywhere near as strong as those prior candles on the 15th and the 19th of June. Derivative oscillator is pretty much flat. Price percent oscillator is headed up. Now we have the 2-day and the weekly moving in the same direction. What's the 4-hour chart telling us? Well, it's not telling us anything until it loads up. Again, part of the problems of traveling. Appreciate your patience. Let's see if we can get this to load. There we go. What do we see there? Well, it moved over going up in the morning. And again, still negative on the derivative oscillator. Price percent oscillator crossed over going up and then stayed, hit about the same mark in the afternoon. Still don't see the derivative oscillator having flipped over into the green. Pretty weak, of course. Don't discourage you from jumping in and practicing something like that. But of course, as you well know, we like to see, as we saw back on Thursday the 14th in the afternoon, we like to see the derivative oscillator and the price percent oscillator both crossing over at the same time. We don't have that there, which again portends typically, not the strongest of movements, but the derivative oscillator looks like it's trying to cross over, has not yet. Let you make a call on whether or not that seems a strong enough move for you to want to engage. Okay, lastly, we go to gold. Gold down 0.37%. Remember, gold crossed over going down back in mid-March, then went up for a few weeks and started moving down in earnest for that week ending the 27th of April, and has pretty much been on a downward trajectory since then, actually increasing so far this week, dropped way off, 0.37% down for the day. Derivative oscillator gaining downward momentum, price percent oscillator heading down. We look at the 2-day chart and we see that we have 8 days of down movement, price movement well below that weekly trend line. We see the derivative oscillator gaining downward momentum, price percent oscillator heating up. What do we see on that 4-hour chart? Well, looks like things are trying to level out somewhere, around the 119, 120 mark. We thought things might level out somewhere around the 122 mark, 121. Yeah, I'm sorry, originally around the 122 mark, and then flipped over around the 121.17 mark. And now, of course, all the way down to about the 120 mark. So again, we haven't had a jumping in spot yet. We haven't had that rollback on the 4-hour chart. So we'll just continue to keep an eye on gold and hope that that 4-hour chart will really start making us feel better about it. It has worked some over the last few weeks, but again, not like we saw with nice, strong movements where we could really feel it. But again, it has been getting better over the last couple of months as far as using that 4-hour chart. It's given us a couple of fake outs recently, but we will continue to hope, keep watching and seeing how well it does for us. Boy, we go back into December, we go back into January, we go back into the prior year, and we've just seen some really beautiful moves in gold where it was clean and clear on that 4-hour chart. We could use it over and over again. So hopefully, again, that'll start working. How long do you use a chart? As long as it works. Folks, that's where we are as we end the day on Monday. Go into this new week, Tuesday. We're going to be finishing up the week of June quite soon. And we, of course, will be providing you with that quarterly chart review to all of our subscribers. So again, go to the website, chartingwealth.com, sign up. We'd love to have you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.